Krishna, do you think then the pain trade is still up in the equity market? Is the pain trade equities higher?
Oh, 100%. I think the markets are still not priced in for a significant likelihood of a soft landing. I think the market levels, if we think that earnings are not going to be deteriorating rapidly, which would be the outcome in a soft landing, I think the pain trade is definitely 4,500 in S&P.
Krishna, where are you on the bond market then with that in mind?
Well, so the bond market is very challenging at the moment, primarily because it has rallied as much. So I think, one can argue about valuations in equities a little bit, but in bonds, unless we have a hard landing, it's very difficult for me to see how the back end of the bond market rallies significantly from here.
353 right now, yields up 5 basis points on a 10-year, on a 30-year, higher by 5 basis points also to 370. Do you agree with that assessment, Rob, when it comes to the bond market? Hard to make the case for them to rally here without a hard landing.
I think that's true in the short term, and I think that over the next 6 to 9 months, while the Fed is wrapping up the tightening cycle, the back end, as a tactical move, could be under some upward pressure here. I think that, it is a very difficult market to evaluate the underlying economy, the valuations, and on that equity front and the risk appetite front, Morgan Stanley that you brought up had a very interesting piece of research highlighting the huge gap between changes in earnings expectations, where earnings are coming in, what typically happens, and the bearish implications. I think the one thing that may be missing from that analysis, which applies very well, that relationship that they're looking at, it hasn't applied as well in the pre-1980 environment. And it just so happens in those periods, the stock market, came off in advance of the bad economic news like it has this time. And also, interestingly, that was a very high rising inflation kind of environment. So I think, things are very confusing. People are, reticent to take a position, but big picture, it looks like for bonds, we're in some kind of a strategic buy zone, and equities are probably not as dangerous as some may be highlighting.